So building on this theme of partnerships, let me introduce our next panel. It is about working together towards a brighter future. And we're going to hear firsthand from the innovators on how collaboration is changing financial services for the better and allowing public to benefit at scale. And to introduce our panel for this discussion, I would love to welcome Amy French on stage, who is the director of Level 39.
Thank you Thank you so much. I am delighted to welcome my fantastic panelists for our discussion this afternoon. So firstly, I have Shriyanka from Swift. We then have Nick from Leeds Building Society. We have Rob from Liberis, and we have Alasdair from Aquis Exchange. We have a lot to cover, so we're just going to dive right in, I think. And Nick, I'm going to come to you first. So could you share with us the partnerships that you're working on at Leeds Building Society and how company purpose and culture dictates those partnerships?
Sure. So we're a purpose-led mutual, and I think one of the advantages that gives us is we're not beholden to shareholders. So as a mutual, we're able to take a longer-term view of our priorities. And for us, that means we think about innovation as a way of advancing our purpose rather than as generating a commercial return. So our purpose is to put home ownership in reach of more people generation after generation, and that is something I can't emphasize enough. It's in our thinking every day. It guides our strategic decision making, and the thing that we're trying to solve for is that home ownership is at its least affordable since our founding year in 1875. So I'll kind of let that sink in because it feels like a fairly sorry state of affairs to me, and the system is clearly broken, and we don't think that is acceptable. So the way we think about innovation is it's got an absolutely pivotal role to play in terms of bridging the gap that someone's dreams about getting onto the property ladder and their ability to make that a reality. So for us, the purpose absolutely guides how we think about where we need to innovate. So first and foremost, it's about understanding what are the barriers to home ownership that we're trying to solve for. And we've assessed that basically as building a deposit, because it's very difficult to build a very large deposit, and affordability. And obviously that's been exacerbated in the last 12 months with the fallout from the mini budget. Then I think we need to objectively understand where our capability gaps are, and then work out what does it make sense for us as a business to actually innovate in-house ourselves versus where does it make more sense to actually partner with like-minded organizations who share our values, who've got some fantastic technologies and emerging propositions that can help us accelerate purpose and put home ownership in reach of more people. And then in terms of sorry, just hogging the floor a little bit, I feel. And then in terms of the partnerships themselves, probably the one I'd point to, we've recently launched a purpose-led partnership with our partners at Experian. So we're the first UK lending provider mortgage provider to plug into their Boost product. And this is one that actually resonates personally with me quite strongly because, when I was applying for my first mortgage, I had a reasonable financial track record, but it wasn't fully taken into account on my mortgage application. So it uses open banking technology to kind of interrogate a potential applicant's current account, looks for kind of positive attributes that could be pulled through to enhance the credit score, so things like regular debit payments, council tax, digital platform subscriptions like Netflix and Spotify, and then we ingest that, and obviously Leeds Building Society then can use that in their mortgage decisioning process, and that absolutely directly aligns with our purpose because it's enabling us to say yes to more people in terms of getting them on the property ladder.
Fantastic, thank you. And that's obviously such an amazing opportunity for many more customers. So Shriyanka, coming to you. Swift being a global financial infrastructure, serving 200 plus countries, how have partnerships helped you continue to deliver value to your customers worldwide?
So Swift, we've had the advantage of being around for 50 years now. We started our journey as a point-to-point messaging limited to financial institutions, but today our portfolio of products has evolved. We are now providing a cloud-based orchestration platform for transaction management that has a reach of 11,500 institutions, 200 countries, and these banks can then design their end user experiences on this 24/7 real-time, secure, scalable infrastructure. And in this journey, our community has evolved. We've gone from financial institutions to market infrastructures and their communities. We've onboarded corporates, we've onboarded fintechs. Our current focus is onboarding more PSPs and PISPs. And our journey, our access to 200 markets would not have been possible without our partners. Our strategic partners have enabled access to these markets towards the SWIFT infrastructure. Our delivery partners have helped implement our strategic vision. The implementation of ISO 20022 in over 80 plus domestic markets, domestic RTGSs adopting ISO 20022 would not have been possible without our delivery partners. Today we have scale, but we are also looking for platform partners who will come on board and complement our capabilities, embed SWIFT capabilities, SWIFT APIs into their digital solutions, and help us join the dots in our strategic vision of offering secure, instant, frictionless transactions, and towards common G20 goals of speed, cost, transparency, and access. And the advantage to that is you also get an access to 4 billion accounts. So that's about how SWIFT operates in 200 markets with the different levels of partnerships. And I see many fintechs in this room. Some of you have had your, the start of your journey at SWIFT's Cybos InnoTribe stage. So those are multiple different options and ways in which partnerships work at SWIFT. And for those who have followed us closely, you've also seen we've announced partnerships with Wise and Visa earlier this month. This just shows that our end goal is to offer choice, optionality, and complement our own capabilities.
Thank you. And we'll definitely come back to the identifying the right partnerships in a bit, but a very quick follow-up question. As a member cooperative structured business, how does that impact the way that you're able to collaborate cross-industry, or does it impact?
So yes, we're member-owned. Some of the largest banks in the world are stakeholders. We are a cooperative. And that is one of the reasons SWIFT is looked at as the entity that is continuously insourcing complexity that exists in the industry today, and we're solving for that. And our approach to partnership kind of reflects that. It's about value co-creation. It is about partnership. It's about purpose-led innovation. If you look at the whole, the advancement of blockchain technologies and the mainstream adoption of that, there are many distributed ledger ecosystems that are coming up today. But to bring incumbents into the play, you need to insulate them from the complexity at hand. So we've partnered with Chainlink, for example, where we are using their CCIP, the cross-chain interoperability protocol, to kind of insulate these incumbents and bring the incumbents onto the chain, where you can bring one common layer and solve for fragmentation by offering those kind of solutions. Also in the world of federated AI, we see ourselves being able to innovate at the center, train algorithms at the center, while data sits distributed inside of banks in a secure, anonymized way. So there are ways in which we can tap into technology and make that mainstream and let the end user reap the benefits of that. So value co-creation would be the biggest ethos. And a big shout out to the Cybos hackathon that was held earlier this year, where the theme was ESG, and I have to say that because today we convene for FinTech for Good. There were 37 different companies that showcased 200 different participants, and there were some fantastic solutions at hand that could measure ESG impact, that could help us build better compliance towards ESG. And my favorite one there was one that built in sentiment analysis into the AI model, into an ESG lens. So yeah, that's pretty much how a cooperative kind of brings value back to its members.
Brilliant, thank you. Rob, coming to you. So at Liberis, you are on a mission to provide small businesses with accessible and responsible finance. Can you talk to us a bit about that mission and how you identify the right partners to deliver it?
Yep, sure. So for those of you who don't know, Liberis is an embedded finance platform. We haven't quite been around since 1875, I think I heard. Nor are we present in 200 countries. That's overwhelming. But we have been around about 10 years and we're present in about 20 countries. What we do is we craft and distribute financial solutions for small and medium-sized businesses. So think things like 10 to 20,000 pound cash advances all the way up to £1 million term loans for people like corner shop owners all the way to TikTok influencers. So anyone who operates and runs a small to medium-sized business. The reason we do that and our mission and why we focus on small businesses unfortunately isn't because we think they're the easiest to serve or the most revenue. It's because we think they're the most chronically underserved today. Small businesses account for about 90% of all businesses globally, which makes up about 50% of all employment globally, yet I think you can count the funding they get on single digits or single-digit percentages. So they have horrible access to credit today. It's because they're hard to reach. They are all very, very different and unique. Their owners like to bake, they like to build things, they like to sell stuff. They're not necessarily as financially literate as the owner of a large corporate. And our mission is absolutely to close what we think is a roughly 3 or 4 trillion funding gap by offering solutions. Now, the hard thing, there's a reason there is a funding gap of 3 to 4 trillion. It's because it's very hard to serve small businesses for some of the reasons I've explained. And we simply couldn't do it alone. So we don't see ourselves as a platform that we fully own and we build and we exist in isolation. We are very much a core part of a wider ecosystem, and we rely on lots and lots of different partners to make our proposition work. Broadly, there's 3 types of partners we work with. The first are our distribution partners. These are people that we use to access and reach small merchants. So think of anywhere where a small merchant hangs out day to day. So that would be taking card payments, so acquirers. It would be selling e-commerce goods, so think of an eBay. It would be a TikTok influencer, so TikTok. We partner with those companies to allow them to offer their company's solutions. So a lot of their credit solutions is actually Liberis underneath the hood. That's the first. The second is our funding partners. So we're not a bank. We don't take deposits. We don't have capital to deploy ourselves. What we do is we go and, on a regional basis and a product basis, identify the right partner to distribute capital. Now, examples would be Barclays or HSBC, where we work with them to understand what they're trying to achieve through their products, craft it accordingly, and make sure that it's distributed in line with what they expect. And then finally, the third bucket is we have what we would call infrastructure partners. So these are partners that we couldn't offer our solution without. And I couldn't name all of them, and I probably don't know all of them. But these are people like the credit bureaus. These are people like the compliance and risk tools that operate in the ecosystem. And frankly, they do things that are far too specialized and we could never do ourselves. And so we see our job as bringing together that distribution, those funding partners, which is really the supply, and then building a platform out of all the great specialists out there to create a platform that, when it works at its best, distributes capital seamlessly to small businesses who otherwise have no access to it.
Brilliant. It's really interesting to hear all the different players within that partnerships ecosystem. And on that, I will definitely come to you, Alasdair, and about the role of regulators and government. Can you talk to us about Aquis, the work that you're doing? You're also a regulator of your own market. Can you share with us what those opportunities bring?
Indeed. For those of you who don't know Aquis, we are a stock exchange group. We actually, 1 in 20 transactions in equities across the whole of Europe will actually trade through Aquis. We're a supplier of technology, exchange-grade technology right the way around the world, and we operate this primary market. And this is the point of why we deal with government, we deal with regulators, we deal with treasury. This country is brilliant at startup capital. All of you here, entrepreneurs, have found startup capital through EIS, SEIS. And to be perfectly honest, we are truly rubbish when it comes to scale up. And we watch so many of our companies disappear across the Atlantic and go to America because they understand it better. Our job here is about the challenger stock exchange. Why is America better than in the capital markets than we have here? Because they have innovation created by that competitive tension between NASDAQ and the New York Stock Exchange. And that's what we need to do here. And we need to get the public back into public markets. We need to make quite certain that scale-up capital becomes easier for people to attain. And why do I say that? That when I founded our business 10 years ago, I found I spent almost 80% of my time doing something I knew nothing about, which is raising capital, and about 20% of my time actually focusing on the business. What we need to do is find a mechanism that we can actually get entrepreneurs to spend 80% of their time on what they're good at, and find it easier for them to get this scale-up capital. And the only way you can do that is by making quite certain that we can get the retail involved and the wholesale involved. Our markets today operate, in general, on 20 to 25-year-old technology. We have to build markets with technology for the future, and we have to be able to make it simple and easy. And simplicity is one of the things I will tell you in financial services just doesn't exist. I was saying actually at the party conference earlier on a platform earlier this week that, you know, if you went into a shop and every single thing on the package said you might choke if you eat this, you're probably not going to buy much of the product. And yet what we do with equities is we tell people in advance you could lose all your money. It's extremely dangerous. All the things that actually we shouldn't do. We've got to find ways where people and consumers are prepared to take risk. Because when I started in this game a long time ago, I was taught a simple message: risk comes with reward. And we need that reward in order to make certain that we get the growth that we need in this country for the liabilities that are going to come in the future. And partnership is so essential because this country had a monopoly. When I was taught years ago that a country is made up of a flag, an army, and a stock exchange. That is not the way today. We need to think of it we invest in completely different ways. So partnership to explain to regulators, to change the rules from the monopolistic way we had, to work with technology companies at the cutting edge of technology, to build platforms that allow simplicity and access so that we can do the right thing, which is get capital to the great growth businesses, many of whom are in the audience today.
Brilliant, thank you so much. Somehow we are already running out of time with 20 seconds left. So very quickly, bypass the other questions that we had, but what more, very quickly, can be done across financial services to serve the needs of the customers of the future? Somehow answer that in 10 seconds. Shriyanka, go on.
So if I think of customers of the future, we are talking about digitally savvy, 24/7, on-demand, hyper-personalization, and I think of my 8-year-old Minecraft gaming, Nintendo-wielding son. And for that, I think we need to lay the foundations of a better data governance and data sharing at this point, and also a framework where ecosystems will thrive with better trusted partnerships.
Thank you. Nick, any final word?
No, I mean, I think a theme that's run through this morning's kind of various discussions has been one of inclusion now, financial inclusion. For us, that's about how do we make home ownership and the housing market more inclusive. I'll level up, you know, we're a fairly simple financial services business and we find fintech quite confusing. But we're really clear on what we need. So if we can find some way of kind of creating that effective intersection, if you like, between what's out there and what we know we need, that would massively help us kind of unlock the potential that we think our business has got.
Thank you so much. We are very much, there's a lot of flashing red lights in front of me. There's so much more we could have covered, so please do come and have a chat to the speakers in the breaks. Thank you so much. Thank you so much to the wonderful panelists.
Thanks.